That sounds terrible. It's like the end of like your company's falling apart, right? And that's not true for Netflix's situation, but what is true is that for the first time they faced net churn. If you look at the top line growth of 10% and for the first time ever net churn, it brings you to the most important point, which is these key company, key performance indicators are what usually drives the business fundamentals behind the scenes. And so on the top of every press release of each company when they report earnings, usually above revenue, before profits, are the metrics that matter. Like Spotify is a perfect example. You might be listening to this podcast on Spotify. At the top of the press release, Daniel Ek doesn't say, here's our revenue. Daniel Ek says, here's the premium subscribers, here's the freemium subscribers, here is it is in total, here how it's trending, here's where we think it can go, this is where it was last year. In a table, before profit, free cash flow, all that GAAP accounting stuff. And so, I've just been on a mission to try to build out this database of all these key performance indicators because I think that they matter and I think that they're hard to find in aggregate for these publicly traded companies.
They are hard to find, and it's cool to see resources like yours popping up. I mean, to give an example, you mentioned Netflix with their net churn. A lot of times when I'm looking at different companies, I will want to compare different metrics that the companies also, it might not be at the top of the press release, but it will be if you go down and you look, and it's not to say it's buried, but it takes some work to get there, right? So like if you're looking at retailers, you're looking at same store sales. If you're looking at restaurants, same restaurant sales, and you compare how a company is doing in those key metrics compared to their competitors, and you can sometimes see where a company is the leader in their field when you have apples to apples comparisons with other companies. And that doesn't always show up in the financials. Like you said, revenue or profits doesn't always show up year to year because there's so many moving pieces, but some KPIs can be so important. What's hard about it is it's different for every business, and what we think is a KPI doesn't always mean is a driver, but that doesn't mean you don't ignore them, right? You have to certainly look and see what are the KPIs and how can I use them to make better investing decisions.
Yeah, it drives a lot of valuable insight. And like you said, there's the ones that will be buried. One that we really like, which sits on like page 186 of Amazon's 10K, is their warehouse square footage. So this tells a really interesting story, right? Their footprint in terms of like real infrastructure has exploded to over 600 million square feet of warehousing space. And so it's on page literally like 186, I think it is, on their 10K, on their latest one. And we think that that's a really interesting story to track because it speaks to their competitive advantage, which is this distribution and infrastructure competitive advantage. All the other metrics, like how do you really quantify that story, right? Without talking about something like, well, look, they have 600 million freaking square feet of warehouse storage. Like how do you compete with that? Like look at the CapEx spend on that. Like it drives a moat itself, like in CapEx spend, as much as we love like asset light compounders. I mean, it's a real thing. It's hard to replicate. Yeah. And so I think like bringing it back to, this is the Investing for Beginners podcast. A lot of new investors will look out there and you are so blessed. And this is not like a promo of my own product. Like you're so blessed from a fee perspective, a reduced friction perspective, a data accessibility perspective to get this stuff that is so, like used to be so hard to find. Dude, completing a trade like 10, 20 years ago was impossibly hard. Like the friction has dropped off a cliff. It is a wonderful time to start being an investor, to be an investor today, especially if you can get prices at, compressed prices like they are today. I'm just very optimistic about the future, and I'm very optimistic for people who are just getting started because the education, the information, the fee structure, the cost, the ability to get started, the ability to connect your entire financial life, it's just so much better than it was even just 5 years ago. So I just think it's wonderful.